Anthony Grasso here, bringing you financial news you can use. In this series of videos, I'm going to do analysis on stocks that might help recession-proof your portfolio. I will take a few stocks in very specific sectors that tend to do well during recessionary times that we're definitely going into right now. Now, in this specific video, I'm going to do a stock analysis on Autozone. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing. Hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is definitely brought to you by Webull. Now that's an online brokerage trading platform where you can buy stocks and options and ETFs and cryptocurrencies. If you sign up today and deposit any amount, you can get 6 free stocks by using my referral link in the description down below. Okay, so Autozone is a retail and distributor of automotive replacement parts and accessories in the United States. You should all have passed by at least one driving down the road. Now, the company operates with 2 segments, the auto parts stores and the others. Now, the other segment includes ALLDATA, which produces, sells, and maintains automotive diagnostic, repair, and shop management software used in the automotive repair industry, and e-commerce, which includes direct sales to customers through Autozone.com, which I use all the time to get discounted parts for sales not fulfilled by local stores. Now, the company operates about 6,115 stores in the United States, 673 stores in Mexico, and 58 stores in Brazil. So let's just look at some of the headline news that have just come across the market right now. Now, some news facing the auto parts market overall is that the auto parts market faces a soft second quarter results, a downside risk seen for Genuine Parts and O'Reilly's, a competitor of Autozone. Now, this analyst states that the auto parts market could report a softer than expected performance during the second quarter as traffic waned in June and inflation and rising interest rates, but I'll definitely get into that. Now, the analyst reiterated its neutral rating on Genuine Parts and O'Reilly Automotive, and they continued to recommend Advanced Auto Parts and Autozone, and this video is directly about Autozone. And by the way, this analyst is very specific, so let's go over some of the fundamentals of Autozone right now. Now, the stock is currently trading at around $2,145 and some change a share, with a market capitalization of roughly around $41.9 billion. Now, the company is projected to have about $16 billion of revenue for 2022, give or take a little bit. Now, the revenues are projected per year to increase over the next few years to be around $17.58 billion by the end of 2024. Now, the earnings are forecast to grow about 3.48% per year, which is pretty good. And earnings have grown about 14% over the past 5 years. Now let's look at some of the valuation analysis and growth analysis, financial strength analysis, and profitability analysis of Autozone. Now, just looking at the valuation analysis, because Autozone is in the specialty retail industry and has positive earnings, the PEG and PE ratios are the most appropriate valuation measures. Now, the price to sales ratio is less instructive than the PEG, which is the price to earnings growth, or the PE, which is the price to earnings, since the company has positive earnings. Now, therefore, Autozone seems expensive with a PEG value of about 2.08 times above the specialty retail industry median PEG of about 1.8 times. Now, this is supported by a PE ratio of 18.9x times. That is also above the industry median of 7.56 times. Now, looking at the growth rates analysis, earnings growth at Autozone outperformed the revenue growth over the past trailing 12 months. Now, this is a trend that is not sustainable if profits are to continue to grow at this rate. However, though, this result was better than the average company in the specialty retail industry, where earnings fell over that same exact period. Now, looking at the financial strength overall of Autozone, Autozone is one of the most highly leveraged companies in the specialty retail industry and has a debt to total capital ratio of about 226%. Additionally, the percentage of debt used in its capital structure grew this year. Now, given that the company's operating profits are about 18 0.76 times greater than the interest payments, there should be little difficulty in repaying that debt. So they give a thumbs up on the financial strength. Now, looking at the profitability analysis, based on its growth margin, operating margin, and net margin, AutoZone converts a larger percentage of its revenues to profits than most of the companies in the specialty retail industry. Furthermore, the company is profitable with an operating margin of 20.3%, which is great. Let me bring it back over here. So what do the analysts say about AutoZone right now? Well, the average price target of AutoZone over the next 12 months is around $2,230 a share, with a high estimate of $2,500 a share and a low estimate of $1,795 a share. So it's definitely trading below the average of what they project it to be over the next 12 months. So let's look at what is the fair price of AutoZone when looking strictly at those future cash flows, people, to see the estimated intrinsic value. Now, I'm just going to briefly go over this. Those who want to do their own calculations, they can. So for this estimate, you can use the discounted cash flow model, and from that analysis, it shows that AutoZone is undervalued by a whopping 34% for a fair value price of $3,251 a share. But that model doesn't take into account a few things like risk or future earnings. And the discounted cash flow model also doesn't consider the possibility of cyclicality, of an industry or a company's future capital requirements. So it doesn't give a full picture of a company's potential performance. And just take that in mind when you do put your own assumptions in your discounted cash flow model that you're doing. Use it as a tool to come up with your overall strategy. And going over the few of the analyst reports, I'm just going to go over it too. The CFRA report has a hold recommendation on AutoZone. Now, their hold opinion reflects specifically a valuation that they consider fair, growth from a combination of new store openings and same store sales growth, stellar cost performance, strong gross margins, and aggressive buybacks. Now, AutoZone boasts industry-leading sales per square foot, as well as higher gross operating and net margins than most of the automotive aftermarket peers that we will cover. Now, they view the long-term trends for the automotive aftermarket retail industry as favorable, driven by the record high U.S. vehicle age of around 12.2 years per used vehicle and pent-up demand from recent maintenance deferrals. There's definitely a lot of maintenance deferrals, and I'll definitely go over where I think the car market is going to go over the next few months. Now, they also say that AutoZone recent comp performance has been very strong, and miles driven, another driver of vehicle maintenance, will likely increase. And I've definitely seen a lot of more traffic on the roads over the past year since we've basically come out of the pandemic. Now, risks to their recommendations and target price include a significant decline in consumer spending, a sharp rise in oil prices, a decrease in auto usage and miles driven, and declines in same-store sales, which could cause expensive deleveraging. So I want to briefly talk about that. A sharp rise in oil prices, which we've definitely seen, is going to make people want to cut back on how much they drive. They drive less. They need to maintain their vehicles less, but I think there's going to be a lot more used vehicles than new vehicles being sold coming up in the near future. Okay, so let's go over the second report that I saw. The Ford Equity Research Group has a buy recommendation on AutoZone, and that is a result of their systematic analysis on three basic characteristics that they see. They look at the earnings strength, relative valuation, and recent stock price movements. Now, the company has managed to produce a neutral trend in earnings per share over the past 5 quarters, and while recent estimates for the company have been raised by analysts, AutoZone has posed better than expected results. Now, based on their operating earnings yield, the company is about fairly valued when compared to all of the companies that they cover. So, share price change of the past year indicates that AutoZone will perform very well in the near term. So, am I a buy, hold, or sell recommendation on AutoZone? Well, here are my thoughts. Now, if we look back historically speaking, AutoZone has been the best performing stock in the retail sector during prior downturns. AutoZone has rallied 41.6% on average during the last 3 downturns and year to date. Now, the company's focus on non-discretionary items or auto parts that drivers need for repairs and replacements regarding what the economy is doing. No matter what they're doing, you're going to need to put brakes on your car. You're going to need to fix that engine. You're going to need to buy a bunch of things for your used vehicle that's about 12 years old right now. This is what has earned AutoZone a buy rating just this week from Goldman Sachs. So you might be saying, aren't there outside macroeconomic forces at play in the automaker space that I should be aware of and afraid of, like chip shortages and supply chain issues? Yes, I do agree that there are issues with chip shortages and supply chain issues. However, though, AutoZone is being the go-to place for automotive parts suppliers, is one of the net beneficiaries as those issues get sorted out and we have more chips on the market. It's just going to be a gold rush for AutoZone. So now if you ask, what about the rising inflation and interest rates that is affecting the market? How's that going to affect AutoZone? Well, I go to the fact that the average cost of a new car is definitely out of reach for most of the buyers, consumers out there. It's just gone up so god awful high. And the used car market is currently showing signs of reversing course and is dropping in prices. Now, this is going to be, it hasn't been a drastic drop in used car prices, but that crash probably is coming, probably Q3, Q4, I would say Q4 into 2023. And more buyers are scooping up those used vehicles, and AutoZone is definitely poised to be the go-to for auto parts. So based on all of that, I am a buy recommendation on AutoZone, and I put a 12-month price target of $2,255 per share. Now let's just examine that for a second. The stock market has taken a toll. We're going into a recession. There's so many negative factors out there. And to have a stock potentially increase in value over the next 12 months is a hedge against inflation and against the current economic market. Now, that being said, will that happen? There's a really good chance that this stock is going to outperform the market over the next 12 months. Now, I believe that this is a great recession-proof stock to have in your portfolio within the retail sector, and it's for the long-term hedge. Now, short-term, yes, we did take a small bump in the price over the past a couple weeks, but that's just a little bump in the road. And stay tuned for other stock reviews for recession-proofing stocks in other sectors that I'm going to review. I'm going to go over the healthcare sector. I'm going to go to the commodity sector, staples, financial, industrial, and utilities, just to name a few. And I'm going to take a group of stocks that I feel that you possibly might want to look at to make sure that you go on into this year, the end of 2022 and in 2023, to make sure you don't lose your shirt over that. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and cryptocurrency reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.